Greetings, everybody. This is Jeff Scott. I'm actually starting this on the 5th at 11:24 p.m., but by the time you see it, it'll be the 6th. So I'm going to leave the date as it is. This is my top-down review, and I entitled it Fed Up, which could have all kinds of different meanings, but let's just leave it with the superficial meaning that the Fed drove the market up on Friday as Powell became much more dovish, more to follow. Could be fed up that you're fed up with the craziness of this market. You could be fed up if you were on the sidelines with yesterday, but that may or may not turn out to be a good thing. Disclaimer, this is for education purposes only. Any recommendation in the spirit of education, not an investment advice. I'm a doctor, not a broker. I am independent. I have paid for all the tools that I use. Anything I say is my own opinion. No one pays me to say things. And I say what I think, and I demonstrate the programs during these programs that I actually use. Trading involves risk. You and you alone are solely responsible for any decisions you make. We've seen this before. I started with canceling from O'Neill, improved by Morales and Catcher, taken to the computer, and hypercharged by Ian Woodward and his partner Ron Brown. As I've said before, Ron, like me, started as students at Ian, and Ron had the benefit of actually becoming Ian's business partner. This is George Lee, a good friend of mine in the Pacific Northwest, who's an outstanding trader. Van Tharp, the king of position size and money management. Cigar with Superior Profit, who's got some indicators I use in TradeStation and Metastock, as well as his Q products. And then my friend, mentor, John Person, who I met him first by purchasing his indicators, listening to him at Traders Expos, chatting with him, and we've become friends over the years. He's got great tools, books, and a great teacher, great teaching style. I own a lot of different programs, and of course I need to update this, so a lot of people ask me about cigar stuff, so Superior Profit.org, not .co, I'm sorry, and that would be Edge Vital Elite programs, which would be the Metastock add-ins as well as TradeStation. I'll demonstrate some of those during my review. HighGrowthStock.com is the parent website for HGSI. On it, you can get a free 30-day trial with no credit card asked for. And under investing strategies, you'll see hundreds of movies by me, Ron Brown, and others. Stock patterns are cyclical. Well, over the last several weeks, we've clearly been in a stage 4 fear. Now, the question is, did we have a V bottom and are we right back into stage 2 and it's all hands on deck, everything, buy everything in sight, or are we just running up before we run back down? I'm going to take the latter approach, although I have gotten extremely to the long side. I started, at the end of the day, Thursday, I knew that Powell was going to speak, so I was sitting in this camp. Now, I have some long-term long positions, such as Amazon, of which I had been protecting myself with puts and selling out of the money calls and deep out of the money puts. I closed up all my option trades except for a call spread, a bullish call spread, before the market opened Friday. I still had some OEX puts that I had sold. I'd done a synthetic trade where I had a short position in the OEX, paid for it with a short position to the long side. And I covered the long side on Thursday. And then obviously I got hurt some on my short OEX at the open, but I covered that as quickly as I could as well. I bought some more stocks. I bought Sienna this week. We'll talk about my Netflix positions. Clearly has been outperforming the market from a relative strength perspective. I added to my gold. I bought a small gold. I think it's PVG. We'll talk about that later. I have bonds. I have gold. So I'm still somewhat defensive. And also, this week we saw a big bump in energy, and I bought some Continental Resources. Just to show you how much a difference some news makes, this was the Thursday close. And real estate which, like utilities, has been doing well, had a lot of green. Utilities had a lot of green. Everything else had a lot of red. Just a tough day. And then Friday looks a little different, doesn't it? Green everywhere, even in defensive plays. So that was interesting. Major markets, you could see that the E-minis had a big move up on Friday. So it had a big move up last week, then a flag, and then it took off again on Friday, closing above its 17-day with a recent new PPS buy signal. NASDAQ futures actually had a reversal on the PPS signal on Thursday, but on Friday took that out, a new buy signal on the daily. On the YM, the Dow futures, similar story where they reversed very quickly a sell signal. The Russell has retaken its downtrending 17-day moving average, certainly has been the worst performer to the downside. The VIX has come down considerably, and the dollar has weakened. But I've just pushed that out to a monthly picture. You can see that the E-minis did actually come down and touch their 200 weekly, so that would be their 1,000 daily moving average. Obviously, the IWM, a deeper cut on the ETF. If you look at the dollar, you can see the dollar once again is hovering around the 200-day moving average, and notice the 17 days just come through. The dollar has been in an up move since the beginning of 18, but it's still well below, it's 17 highs. Now, interest rates in white fell. I don't know if I should say the word stabilize. Let's just say fell on dovish Fed. I think on Friday we got what we wanted to hear from Powell, both on perhaps on reducing the number of increases going forward and the rates, but also adding that the quantitative tightening, the reducing the QE, was not on autopilot. It could be pulled back if needed. The yield curve continues to move down towards an inversion. And as I pointed out before, in pink, we have the S&P 500. In blue, we have the yield curve. And as I look back here, and maybe we'll see up here, is the S&P does not roll over until the Fed starts easing big time and the yield curve heads back up. When it starts to go back up, the spread on the curve is when the S&P falls. You inverted down here, yet the S&P continued to rise until the spread increased. And similar here. So perhaps just because we're getting close to an inversion does not mean the market rallies are over. AD lines, you can't see it well here on both the small stocks and the big stocks perked up. If I look at the NYSE, it's a little bit easier to see that pretty much student body left. The AD lines improved, whether I look at the diamonds in green, the Qs in the light blue, the spiders in yellow, the Russell in orange. And you can also see with falling rates, no shocker, bonds were strong. And last week we talked about a number of bond funds that I was looking at. Breadth improved on the short term. If you look at the 3-month new high, new low, it just rocketed up, but that's a real fast move. But if you look here, stocks above the 200-day and above the 40-day, we're closer to oversold than we are neutral. The daily McClellan rebounded, as did the weekly, and you could see the summation index had traded down to the lowest in years on the daily, and got down to just above the 2016 lows on the weekly. On our buckets, we've gone from very oversold to sort of a neutral picture here. 50-50 stocks above and below their midline, their Bollinger Bands. A few more perhaps to the downside, but I see a bell-shaped curve here and not anything that gives me a signal. Notice that I've updated the components of my S&P 1500 and every other index. I use an edge rater. I do this quarterly, so I updated him this past weekend. Buckets 2.0, hard to see, but this is a new ad, and I think it's a really good ad in Edge Rater, where we could look at days back and what bucket a stock was in, and then he has sort of a score as to how much it's moved. So I've looked at here on the left-hand chart is the movement over daily, and on the right-hand chart, movement over weekly. And you can find some stocks. Clearly, you'll see CF again, Valet again, look good. A number of the stocks that I thought were attractive are showing a lot of strength here on the daily as well as the weekly. I don't expect to see a Hindenburg omen again until we get new highs, and we still have very few and continuing to fall numbers of new highs. On the NASD and the NYSE, it's nice to see that the number of new lows has come down with the recent rally. Now, the market switched on 12/26, the day after Christmas, when we had a big rally with kahunas across the board. It switched to a more bullish posture, which would be this the Woody indicator, and we had more kahunas on Friday, and we are solidly in the green across the board. In addition to the markets turning around, more kahunas on the sectors are also green. So clearly visible strength improving in the markets and the sectors. Now, the canaries in the coal mine, although this is an artificial index, and again, Priceline is now called booking, of the stocks that Ian called the canaries, it actually is very closely mimics what we're seeing in a lot of stocks, which is they've come off their lows, but they've got a lot of moving averages and resistance above them. So moving up, but in a very much downtrend channel. Know your news and earnings. The red dots, this comes from Econoday, references here. The red dots, some international trade numbers on Tuesday. Energy on Wednesday, energy has done well as some FOMC minutes from, I guess, December. Thursday, January 10th, we got jobless claims. Or is that a January Fed? Nope, I guess the minutes from December. We got Thursday, we have some jobless claims, and Mr. Powell, Fed head, speaks again. Let's see if he can keep pumping the market. And then CPI consensus on Friday. Earnings, a light week. As I looked at it, the one that really stood out to me is Lennar. With falling rates, maybe this is a time to be looking at home builders. And although I won't say the charts are good, they're clearly beaten down. Several of the home builders made my large list to be reviewed, and a couple made my short-term list. Market thoughts firmly in the green for the first week of year as multiple news items drive the bulls. Chinese ease on their reserve, which happened late Thursday night and caused the futures to bump. Employment surprise to the upside. That was at 8:30. And then about 2 hours later, Powell added more fuel to the fire by signaling a more dovish tone. So Santa Claus rally, I guess it's the 5 days after Christmas. Well, it did not let us down. And we had on Friday both our O'Neill and Ian Woodward follow-through days. Yet the undertone of a bear market continues. Markets remain oversold and in downtrends. Majority of stocks are below their 200-day SMA. Trade wars are not settled. The Chinese and EU economies are slowing. Now that the House Dems are in the majority, they have subpoena power on Trump, so risk of at least trying to push an impeachment increase. Still need to get 67 votes in the Senate, which you'll never get. And the Fed risk of QT and rate rising, quantitative tightening and rates rising remains, although Powell did put the Fed put back in play. So I think there's risk to the upside, meaning this stock could go further, but I still wonder if we're just getting to better levels to short from. Remember, some of the best rallies have occurred in the midst of bear markets. NFLX Seasonality. Let's just look at it with two of my programs that I use. This is Seasonality Trader, which looks like the old Magenta Trader before there was a split between the developer and the marketer. And here you see the candlesticks over the last 6 months. Not exactly a rip-roaring uptrend. In fact, it's clearly a downtrend. All right. This is in green is a 5-year, in yellow a 10-year seasonality curve which looks at all the different years, the last 10 or the last 5, and you can see you already have a difference where Netflix has been in long-term uptrends, not in downtrends. So that may impact on seasonality this year. We are where the dashed line is, and the earnings occur pretty much at the beginning of this green box. What that green box tells me, if you buy it on January 21st and sold on March 5th, 9 out of 10 years you were positive, and you would have been up on average 26% on these years. If you, on the 1 year that it was negative, it was down less than 1%. This is pretty strong seasonality, and I know a lot of my followers commented about how much money they made taking the trade last year. Not as easy a trade to take this year. Here is the new Magenta Trader, web-based program. It does have a few perks on it. I put the line through today, or through Friday. You can see the big move up on Friday. You can see how hard Netflix has come down from $400 down to the mid twos, and now bouncing back up towards $300. From today, it didn't come through here. All right. It didn't work as well as I wanted to, but the key point here is we have a 10 out of 10 days starting about the same day of January 21st, 10 out of 10 positive, average 23.34 if you hold it for 30 days. This one is not necessarily a 30-day hold. This would be a 30-day hold. It looks like it's very comparable. The variable scanner can look at different hold periods. So you got two programs independently talking about the strong seasonality of Netflix. Now, here's Netflix in 2018. Whoops. Clear uptrend for the most of the time above the blue 50-day moving average. It broke through and the market sold off in November. And here on January 2nd, I believe, you had a clear-cut buy signal breaking above the 50. You had 2 kahunas in 3 days, and I think the rest is history. Now, that is different than 2019, where we are in a substantial downtrend, and we have just now, like we did back here on January 2nd, broke above the 50-day moving average. We've had a couple of kahunas, so it is not the same chart. That said, when you think about how bad the market's been over the last couple of weeks, Netflix has changed its tune, and it's become an uptrending stock. So I purchased 2 vertical call spreads. Hold on one second. I just wanted to show you a little bit about the power of the options. This is my Netflix trade. And if I view trades, let's see. I'll just show you on the long one then. I went long on the 28th. Probably was the day of that first kahuna. I bought 30 calls, 260 strike price. My average price was $22. Those are super expensive. They've got an expiration in February, which means the stock had to move to $282 to become profitable. Now I offset that by selling some 360 calls for $4.20, which meant it was $18 and change for me to buy that position. So 30 calls would control 3,000 shares at 18. So my investment was $54,000 on that trade. Now, I don't win until I close the trade out. The stock actually moved up in the 4 or 5 trading days to just shy of 300. Was up $28 on Friday, and so this little trade's up $80,000 in about a week of trading. Take out 6 days, take out 2 holidays. I also have an at the money, or out of the money, now at the money call, which I bought a while ago. I'm not just thinking that these might go up in value because of the volatility going up into earnings. So these were 300 calls. I think the stock was probably about the 260 price when I bought them. And I just bought a spread of 10, 300, 330, net price of $12,000. And it's only up $1,000 right now. Options can be great. I'm sure you all had good weeks last week. That was a major oversold bounce. I think I was up 16%, 17% on the week. But it's simple. Look at that Netflix trade. Look at what Amazon did, and getting out very quickly on my short positions made a difference. If we look over here at the major markets, let's look at the S&P. Notice the S&P 500 is down here on the bottom. Small stocks, mid-cap, NASDAQ, NYSE up top. That's usually a great environment for growth stock investors. Now, I want to take off my bullish sounding hat and very quickly put on my not so bullish hat. A couple weeks ago, I did this. And I said, well, what's going to happen? And I did this when the market was still dropping. I said, imagine if we end up down here. Now, I adjusted my line based upon where we actually traded down to on the 24th. Christmas Eve massacre, and then we traded down a little bit below that, I believe, on the 26th, and then we took off. I said, and I've continued to think, that there are a number of scenarios that see us retracing most of what we've lost and then reversing and potentially retesting the lows. Right now, we haven't disproved that theory. We've made it past the 23% retracement. The 38 is at 25.72. The 61's at 27.12. Among friends, somewhere in this $2,600 range, which is the top of the box, is where I think we have a high risk of a reversal. Can we go higher, a V reversal, and go to new highs? Absolutely. Supporting that would be an increasingly dovish tone from the Fed, more economic numbers, which are not as bad as we thought. I mean, that will be Goldilocks if we continue to show improvement in numbers while at the same time having a Fed decide to be less aggressive. Goldilocks is a great fairy tale story. Or do we retrace? I have to still bet on retrace back and then retest, but we shall see. Time will tell us. So clearly we've had a bounce. That's awesome. Where do we go next? Let's take a look. So all of them have the same thing. We had about a 20% pullback on the S&P. This is the spiders. No, this is the S&P 500 index. I'm sorry, not the spiders. And you can see a big move on Friday, a second kahuna in about 6 trading days, and a second eureka, which is our HGSI follow-through day. Very nice. Still have concern that we're going to run up and pull back again. That's my personal opinion. You may have your own. The Dow looks the same. I'm not going to spend any time on these because they all look exactly the same. The NASDAQ looks the same. And the Russell looks similarly. Only the NASDAQ and the S&P had the kahuna. The eurekas are a market level thing, and that was present throughout. And here is the IWM. So the markets are in bounce mode. How far they bounce, no one knows. Certainly ended the day feeling near the highs and feeling positive on Friday. Here is the dollar. Dollar is given up some. This is the cash dollar, which looks different than the future. So it's broken below the 50 and going sideways. Volatility, you would assume, has come down, and it's sitting there on the bottom here. It did rocket down on Friday with the big move in the market, is broken down below the 50. Yet I point out volatility is still considerably higher than it was prior to the market pullback. If the dollar is weak, then what do you think gold is doing? Then gold should have had a breakout, and it has. It pulled back some on Friday, had a PSAR reversal, which we'll see if that means anything. I think gold looks strong. Silver continues to look strong as well. Now, if I can only find it, I'm sure it's right in front of my face. That's usually the worst place to hide it. Silver looks even better than gold, doji on Friday. And if gold and silver are good, then it's a good bet that gold miners have picked up some as well. So And then the other thing that changed on Friday and some this week is oil has bounced. Now, whether it's done bouncing, and that could be a reversal candle setting up here, certainly indecision. We shall see, but there's no question the improvement in oil certainly helped the markets. Now, if we go back here and we go to industry groups, hit warehouse view, and now look at 2-day force, you can see I've got 99 groups up over the last 2 days. That's a pretty massive move. Unfortunately, you're going to see a similar pattern of charts everywhere. Right click here, change index group. Let's start looking at some of the oil exploration names, and you're going to start to see a theme here. The theme is it looks just like the indexes. You've had a huge beatdown, a recovery. Are we going to go all the way to new highs, or are we likely to reverse and retest? I made a comment last week that I had a number of potential shorts I identified, but I was going to wait for them to trade up higher to a better shorting position. I think that comment is still the same. EOG Resources, similar picture. Whiting Petroleum, similar picture. Pioneer Natural Resources. Some of these are great stocks, and you could have made 10, 12% over the last 6 to 8 trading days on them. Are they going to go back to new highs? This is the one that I bought, and I'm already thinking that I'm going to probably be taking profits or selling a call against my call, maybe around the 50-day moving average. I just don't see these things going back to new highs without at least some pullback. So that is the theme of today, big bounces. So that was energy. Let's look at biotech. Now, biotech had some major news. Celgene, which has been a favorite of mine going back for a decade. Unfortunately, since I work with them now, I'm not allowed to own their stock, but I do have a lot of LABU currently, and that benefited from this. Celgene had a takeout offer, which they'll accept from Bristol Myers Squibb on Friday. Huge volume, Eureka, dead stock now, although it's possible somebody else will come in. Now, the deal's was worth $102. It's $50 cash plus a share of BMS. BMS sold off some. I think the deal makes a lot of sense. I think they paid a lot for Celgene. But BMS has Opdivo, which is the king of the immuno-oncology drugs, and this will allow them to broaden out their portfolio. So that should lift biotech, and you'll see Gilead, again, same pattern, downtrend and a move up. Now it's at the 50-day moving average. Will it trade up to the 200 in reverse? Will it break out? Time will tell. It had a Eureka, a Phoenix, a Kahuna rather. Regeneron looks a little bit better because it's now above its moving averages, but it's trading to where it already has a triple top. A breakout here would be interesting. That's an expensive stock. You have a Kahuna coming out of a squeeze. Even the Bongo Daily turned green. Amgen, I thought this was interesting. It too has broken through its moving averages, sort of a pullback with Kahuna, mobile breakouts, squeeze, pocket pivot, all off the 50. Biogen, a similar pattern. So these are stocks that have fought back. They still got overhead supply, but they're breaking above their major moving averages. Insight is one that I think will get some interest in the M&A world. Don't know any inside information about that. Have no clue that that will happen. I do some business with them, and therefore I won't trade their stock. But look at this pattern, a sideways move from April to December, a break above the downtrending 200-day moving average, in a squeeze, and if I remember correctly, they make some money. Let's see. Can't remember for sure. They've got some big earnings per share growth coming in. I think Insight looks different. It's not a cheap stock. I can tell you they've got one very successful marketed drug, one drug being marketed by Lilly for arthritis, and a whole host of new immune oncology drugs coming. Sarepta, a muscular dystrophy company, Vertex, a pulmonary fibrosis. These look better than the energies, although Alexion's another one hardly beat up, has a long way to go. I think biotech is interesting here. I have been playing, for reasons I've already indicated, LABU, which allows me to play them without worrying about any knowledge of insider. I bought some 25 calls, 26 calls. I did a 26, 28.50, it looks like. Let's see, view trades. When did I buy it? On the 24th, I just thought it was getting cheap. So I bought a 28.50 call spread. I paid for that about $4.20, and it's now worth today about $9. So that's been a nice little return as well this week, playing off the bottom. But we're in a downtrend. We got a lot of overhead resistance, and I'm not sure this one's going to go up to new highs without some work along the way. E-commerce discretionary, Amazon, Netflix, Alibaba, JD. These are some stocks that are starting to make some moves. Are these real moves, or are these just dead cat bounces? You could see Amazon now. That may not look like a lot, but from the low here up to the close there, 7 days was a 21% move and 273 points, give or take. Now that seems a little higher, but maybe not to get it down around 1,300. That was a massive move. All right. Now the problem is, what are we sitting right underneath? We are sitting right underneath the 50-day moving average. And if we get through that to 200, if we can get into this range here, then I think the stock can go and threaten new highs. It's got earnings coming in February. This one's got some work to do, but what a big move off the bottom for Amazon. Netflix, I already showed you, it's been moving up since the 24th, like everything else. Reversal on the 26th. And look at this move from the open on the 26th to the close on Friday, a 28% move and 65 points. What a huge move for Netflix. Now, is Netflix out of the woods, and should you be loading up because their earnings are coming? That's your decision. I'd feel much more comfortable saying yes if we got above the 200-day moving average. What if you buy today some calls? Where are you going to buy them at? It would be nice to know what the price is, shortly before earnings come out, a day or so before, so you can buy. If you want to be at the money, what is at the money going to be at the time of earnings? Now, if you want to buy some 336 calls, they'll be cheaper, not cheap. And if it has a big move between now and earnings, you'll make some money. But I'd rather, before I start loading up, I want to see where this trades to and how the technicals look. And I'm going to manage my current trades based upon the chart, although as I already told you, I'll try and sell my deep in the money call before earnings and roll it to something that's a lot less expensive in case earnings go against me. Alibaba, another huge downtrend. Maybe pocket pivot, Kahuna, Mobo breakout. Hard to get too excited. JD.com had some good news. I guess their CEO or one of their leaders is not going to be prosecuted. At best, it's a sideways move, broke above the 50. It's still a pretty beat up stock. But certainly Amazon and Netflix showing some interest. But you notice the pattern. Stocks in big downtrends. Here, look at AMD and NVIDIA, proof of that. Big downtrends. Starting to stabilize. Kahuna on Friday. Is it time to load up the farm on AMD? It might be, but my God, I still got to get through the 50. I got a lot of work to do. And am I just going to run up to the 50 and give me a new shortable event? NVIDIA, similar story. Intel, Micron. I mean, where are the great stock charts to buy? Yeah, Micron's going to run up to 36 and you're going to short it there. It's, even though the indices have done well, I'm not showing you hundreds of good stocks to buy. Are you ready to load up the farm on Facebook? You know, you could certainly argue, taking a look at it, downtrend, it's got a higher low, higher highs. Are we in a new uptrending channel? Maybe. We still got the 200 and the 50-day moving average above it. A lot of overhead supply. Not worth loading up the farm in my book. Google looks a little bit better, broke through the 50, but I still got to get above the 200. Here's what happened the last time, the time before that. So the 200, which had been support, may continue to be resistance. I got a whining dog. Hold on one second. All right, what else do we got here? Twitter. IQ. I mean, yeah, it had a great day on Friday. It was up 9.73%, $1.44. But boy, these are downtrends, and you know what happens to this stock? Does it run up to the 50-day and then come back down, or does it run and go up to new highs? I'm going to argue it's more likely to come back down. Hard for me to get excited by all these downtrending stocks. Telecom carriers, you want some yield? You buy these things when they're cheap and nobody else wants to touch it. Well, AT&T, people are starting to touch. The yield is now down to 6.6. It was over 7 a week ago, but it's in a downtrend over time. T-Mobile, pull back to the 200. Much better chart pattern, but it doesn't pay a dividend. They've got Sprint mergers. CenturyLink, great dividend, 13.5%, but it's in a big downtrend, and 13.5% on a $16 stock is about $2. You don't think it can drop $2 and then your dividend? No, I don't think so. Shia Group. Here's clearly the market can go higher. All these stocks can go higher, and it can be happy day for the bulls. There's just work that has to be done. But Electronic Arts, this is one that's interesting, but look how down in the pattern it is. Now, is it in a new uptrend? Obviously, we've got resistance here at that 50, but if we break through that, that might be an interesting bottom fishing play. Salesforce.com, a great software product, a company that makes money, but whose earnings per share rate seems to be slowing down. You can buy it with a breakout above the 200. I think I'm going to nibble at that. You've got Kahuna as a mobile breakout from a squeeze, but you still got a lot of overhead supply. Adobe Systems, ditto. Workday, that one looks great. I don't like their earnings per share growth, and I don't know this product well, but look at the revenue growth, and you're right below all-time highs. Nice looking stock. Twillo's one that I've been in and out of. It's in a nice uptrend. It did get loose here, but considering the damage to the rest of the market to be this close to its all-time highs, I think Twillo continues to look interesting. The ones that I say look interesting, if the market holds up, I think these stocks go higher. Here's Viva Systems, another breaking above the 50, pull back to the 200, now broke above the 50. Kahuna, pocket pivot, mobile breakout from a squeeze. I think that one looks interesting. So there are a number of stocks here that look pretty cool. Now, banks, I started talking about them a couple of weeks ago. If we stop raising rates, maybe that's bad for the banks. But look at SunTrust. It's moved up the last week or so. Regions. Now, these are all in deep downtrends. PNC, well below their 50, well below their 200. It's hard to get excited by these. And if you really want to be in a regional bank, just buy KRE, which is an ETF for regional banks, unless you think you know more, because it's got the same pattern without individual stock risk. So as much as these are near the top, am I seeing a ton of stocks to buy? No. And then look at infrastructure plays, look at a couple of these. Microsoft down in its pattern. Maybe it's setting up to be a good buy point if the market does well. Oracle, no. Splunk, yeah, the same as Vive and some of the others. It's broken above its moving averages with pocket pivots, kahunas, and mobile breakouts. This one's got some good earnings per share coming in. That's interesting. It's not a cheap stock. ServiceNow. I'm looking for great stocks that I guarantee will go up. There just are not many of them. And the 10th group down was oil and gas services. And Schlumberger and Halliburton are the big boys. And you could see the sell-off they've had. Yep, they've moved up nicely over the last week or so with oil prices stabilizing. And maybe it's time to get back into these 3.2% dividend. Not exactly growth stock investing, but it might be a nice time to load up, and you'll see one of them in my buy watch list. I just want to look at a couple other groups here for interest. Right click. Yeah, I screwed up. I think I screwed up. Let's see. Steel and raw materials, a number of things happen. Valet and Cleveland Cliffs have very nice moves this week. Easing of the dollar. Big bounce here on Valet. I own some Cleveland Cliff. Actually, I forgot about it in the account. Bounce off the bottom. But it's the same story. How far does this go before overhead supply and moving averages? Now look at the earnings per share growth coming into these stocks. And you also look at a revenue hiccup from here, which seems to big growth in revenue since then. So we'll see what happens there. Those are more ore stocks. And then, where am I steel? There, by no means are the steel stocks showing me great patterns, but I see, especially like in U.S. Steel, and we'll look at that in a second, some patterns of potential decent short-term return. 2-day down, nothing. The market's been so strong. But again, you can't ignore the overwhelming fact, concern, question, and that is, are we in a V bottom and the market's just going to go higher and higher or higher, or do we have to respect the more likely that we're going to retrace to some resistance level, and I've highlighted a number on the chart, and then come back and retest and then go and take new highs? I'm still putting my bet over there. Now, I looked this week at longs and shorts. For the most part, my shorts are getting ready. They're not necessarily there. So if we look at a couple of my shorts, and you notice they all were green, all right? All right, so I'm hoping this is going to work. I've got a problem with, no, I can fix that one, I think. When I have too many things open, I get periods of time where charts don't all change. Yeah, all right. So Abiomed, ignore the weekly and the monthly, traded right up to its resistance, has a sell signal come in Thursday. This is at a place that's not crazy for shorting. Align Technology, it's starting to get some bullish signals here, some bullish MACD divergence, but it's got a sell signal in at resistance. Arista Networks, similar story. Here's downtrending resistance. Maybe it runs up higher before I short it. So I didn't see anything that I thought was I have to go out and short tomorrow. But what I saw were a lot of things. Let's just look at this on the other as well. Here is the stock, Intuitive Surgical, that's clearly in a downtrend. On the short term, traded back up into its descending trend line. Frankly, looks like it's going to go down again. When you see this hanging, or this hammer candle there, probably a little reluctant to short right away. But for the most part, I looked at some high flyers that look like the wind is going to blow them over and they're going to become shortable again. WellCare Group, this one here, you'll see a similar pattern. Stock clearly in a downtrend, traded into its moving averages with a doji. Here, traded up to the resistance line. I just need a sell signal, and I've got things to short. So I found a number of things, and let me pull them out right now, that I thought were getting close to setting themselves up as shorts, and I will watch them in a watch list. Let's review those right now. So these are the ones that made my watch in case the market rolls list. So let's just look at it here. Again, I'm not saying that today, but clearly rolled over. You want to short this thing when it fails at the 50. I might short it if it breaks through the 50 and fails at the 200. I'd rather short it at the 50. It's a lower risk short. Abiomed. Align Technology. This one has dropped from 400 to 200, so obviously it's a little late to short. But is it really? It's still an expensive stock. It's got no earnings per share growth and a PE of 38. Arista Networks is another one that's rolled over. Every time it gets up to the 50, it gives you a better place to short. ASML Holdings, similar picture. You want to short it on recoveries up to the 50. This is my concern with so much of the market. Are we going to run into that 50 and be smashed back down, especially with the overall market in trouble? Deckers, a little bit earlier in the pattern, but you've had a double top here. You broke through the 50. Next stop is the 200. Dexcom, I wouldn't be shorting it here because it looks like it might be bouncing, but if it breaks through the 200, this thing was half of this in March. Look at Humana. You want to fail, short it if it runs back up to the 50, but right now I'd wait and see if that happens. So on my short side, I would sum them up by saying I got a lot of candidates, but first I got to have the market do what it needs to do. They may be all shorts right where they are, but I'd be much more comfortable shorting them after they run up a little further. So just a quick check to see who won the playoff game. Dallas beat Seattle. Nice. All right. Now we'll go to the buy watch, and I have quite a few stocks. So since we are at 48 minutes, I'm going to spend up to 10 minutes. I'm going to go through my list and tell you why I like them and what my plans are. As you could see, we have a number of different groups, some steel producers down on the bottom. So let's just start. I'm going to go quickly and tell you what I liked or what I don't like and whether these are short-term or I have to wait and see. I think gold is making a move. I have 2 3X golds. I got the Nugget and I got the U-Gold, UGLD, 2 ways of playing gold to the upside. I think that you probably would want to have some gold at this point. You probably already do. A couple of the fertilizer plays looked interesting. I have to do some more work. This one is CF. It just had a death cross, which is bad, but it also had a kahuna, a mobile breakout from a squeeze, massive earnings per share growth. Earnings are February 13th, pays a 2.7% dividend. A clean break above this area, 45, 46, and I'd be interested in being long CF Industries. Mosaic is the other one, similar pattern, broke above the 200, got some good earnings per share growth coming in, much more than the multiple. Electronic Arts we looked at already, something stirring here. GameStop has a potential suitor, and that may elevate the gaming stocks perhaps. Obviously, this 50-day moving average can be resistant, so I'd like to see it break above the 50, but it's on my watch list. Salesforce we looked at. Twilio we looked at. Viva we looked at. Cooper Tire and Rubber. It's sloppy. It's sideways. Why did I like this? Kahuna, pocket pivot, mobile breakout from a squeeze. Bond goes green, sitting on the 50-day moving average with earnings coming into the stock. Dana Inc. is another bottom fishing stock I looked at. Deep pullback. You know, it's got a higher high here, higher low. Is it beginning a new trend? Perhaps. Mobile breakout from a squeeze. Bongo turned green, has a kahuna, makes money, pays a 2.7% dividend. Grupo, here's a international bank, South American bank. This is the pattern we see. I mean, we're lucky if it's got a base and breaking out from the base. Obviously, it's going to have trouble below the 200-day moving average. Here's an Indian bank. This made my list last week. This one is broken above its moving averages, continues to look good. Huntsman is a specialty chemical company. Here's that pattern again. This one is broken above the 50 on a kahuna off of a squeeze, has a new green daily bongo, 3.1% dividend. Exelixis was the one, I think, biotech that I put on here. I like this one a lot. One, this is an acquisition candidate. Two, they have a drug on the market that I think has blockbuster potential, and they make money. Note to you all this week, and I'll be there, JP Morgan Healthcare Conference in San Francisco. Could be volatile for stocks. Last year, Celgene warned, and that really took the biotechs down. Celgene's the first to speak this year, but it should be a happy talk. They talk about their acquisition. Insight, I already brought up to you. Meritor, commercial vehicles, don't know anything about them. Why did I like them? Sideways here, kahuna, mobile breakout from a squeeze, the bongo turned green. Sienna, I bought this earlier in the week. It's a nice uptrend on a communication technology stock. Mobile breakout from a squeeze, pocket pivot, and kahuna on Friday. Amazon we looked at already. Chegg is another consumer discretionary. This stock, again, look at what's above it. It has to break out of this recent highs here. And then the next resistance is probably up here at 32.5. But it's above its moving averages. The 8 is above the 17. The 50 is crossing above the 200. Kahuna, pocket pivot, mobile breakout. I like Chegg, CHGG. That's probably one you could be buying sooner than later. Etsy is one that I've made some money on this year. It had a big jump in the summer when it announced some increase in rates. Those increases take place at the beginning of this year. You have a stock that's sitting on the 50. I think this looks interesting here. I currently own some, so I'm talking my book. Netflix, we already talked about. By telling you to buy GE, this is not a growth stock. It's in a downtrend, but it's kind of starting to put together kind of a frying pan bottom. It had multiple kahunas. I don't believe the 4.5% yield will be there, but you know, those that like yield, those that want to own a big name, you know, maybe GE's done going down, but I guess they said that about CPenny and Sears. I mentioned home builders with falling rates. This is Pulte, good earnings per share growth, earnings end of the month. I think I said before Linares this week. I might probably wait and see what happens there. It'd be nice to get it above the 200-day moving average. Toll Brothers, ditto. Splunk, we looked at already. Virtue, this is a high-frequency trader. Sold off hard in the summertime when the market was doing well. Just broke above the 200, had a bunch of kahunas when it started its move, some pocket pivots, everything is green above. 3.5% dividend. Got some energy plays, Petrobras. Here's Zscaler, another communications play. I picked this probably for more emotions than chart. It's an IPO, it's sideways, kahuna, pocket pivot, mobile breakout from a squeeze, daily bongo, weekly bongo going green. It doesn't make any money yet. It's an IPO. Just looks like it's getting ready for a move. Hoya is a bottom fishing Chinese internet play, period. Bottom fishing, higher lows, higher highs, but at least higher lows, maybe higher highs, breaking above the 50. Again, kahuna, pocket pivot, mobile breakout from a squeeze. if you were to buy something like that, you've got to put your stop no less than 15.50 because the stock could very easily come back down. Interactive Corp, if I'm looking for pullbacks and uptrends, here's a pullback. It's sitting on the 50. I need it to break above the PSAR dot, but I got a Kahuna mobile breakout from a squeeze. This is IAC. Team, I've been in and out of this stock on its uptrend. Is it ready to resume? I don't know. I put it on my watch list. I wouldn't be buying it tomorrow, Monday. Merck, this is the leader in immuno-oncology. I think part of the reason why Bristol Myers did its big acquisition is Keytruda, which is Merck's asset, maybe outpacing Opdivo, which is BMS's asset in the IO world. It's sitting in a confluence of moving averages, had a mobile breakout and a Kahuna. This is an interesting company, pays a 2.6% dividend. Planet Fitness, this would almost count as a leader, lower left, upper right, from 30 to 55 on the less than a year or about a year, makes money, modestly high PE, but if you're looking for something you can buy and not feel nervous about overhead supply and moving averages, this one looks pretty good. Athene Holdings is an insurance company. This is a bottom fishing stock. This is a high close doji, and if I remember correctly, we have the daily on the right, the weekly in the middle. You have a high close doji after a downtrend with a new PPS buy signal. On the daily, you have a high close doji in a buy signal. Your histogram is positive. Your OBV just broke above a downtrending moving average. Your new person volume indicator is positive coming out of a squeeze. Although it's deep in a downtrend, I see a lot to like on Athene Holdings. Another bottom fishing play is Genco. Lots of kahunas, mobile breakouts from a squeeze earlier in the week. Group strength improving. Why do I like this? Look at the earnings per share growth coming into the stock. You're dropping off 9 cents and adding 45. Even if you don't change your PE, that's a lot of gas coming into the tank. Here's another shipper. Other reason why I like these, and I don't like this one as much, is because if Cliff and companies like that, Valet, are doing well, then they must be shipping more, and these are the shippers. 1.3% dividend. Dollar Tree and retail, it's beaten up. You got to go back to where this came from on the weekly, and you could see it's fallen pretty hard from 110, 116 down to 85. But here's a retail stock, 2 weekly kahunas in a row. It's broken above its 200-day moving average. This one looks interesting here. 5 below, trying to get there. Keysight, another pullback to the moving averages with kahuna, pocket pivot, mobile breakout from a squeeze. Here is an MLP with a big dividend that broke above the 50 yesterday, pays a 6.5% dividend. And GameStop is getting nibbling. And of late, when I start hearing news and the stock hasn't moved too far, I'm not against taking a flyer, so I bought some calls. Actually, I did a Jeffrey synthetic, and then I sold the short position at the end of the day because it had made much of its potential already. We'll see if this one gets bought out. And then here's a small gold player, and I mentioned I bought a small gold player last week. That's coming up next. Here's PAS. Pretium Resources I bought last week. The one that I could have, should have, would have had was Kirkland. Maybe this will be this year's Kirkland. Look at the earnings per share growth coming in. Roll Ride Wrestling, again, another pullback to the 50 with a kahuna mobile breakout from a squeeze. Arcos, these have McDonald's in South America, I believe, breaking out here. Xilinx, a semiconductor play that's actually above its moving averages, a pullback to the 50 with a kahuna, pocket pivot, mobile breakout, and a squeeze. What's not to like? Boy, is this thing loose. Expiry, another semiconductor. I think I gave this one out a couple weeks ago. Broke above the 200. Looks like it's getting ready to go again. It's got great earnings per share growth and pays a 4% dividend, which is kind of weird for a semi. Probably one of my favorite stores is this Canadian Goose. Now I live in Florida, but I travel a lot, and I can't forget when I was up in November-ish in Chicago, and I walked by the Canadian Goose store, and it wasn't even that cold that day, and they were lined up around the block trying to get in to buy some of their apparel. The stock has fallen hard. I'm going to keep a close eye on it, and we'll talk about what that means in a second. Lululemon, big move up earlier in the year, sold off for the last couple of months, sitting on its 200-day moving average. Kahuna, pocket pivots, good place to start thinking about buying it. Obviously, earnings come out in March, and that 50-day moving average would be nice to see you get above it. But I'm going to put that on my watch list. And Horizon is one I already own. This is a specialty pharmaceutical play and a pullback to the 50, kahuna, pocket pivot, mobile breakout from a squeeze. Great earnings per share growth. I still like it and I own it. Couple of steel plays. Obviously, these are broken and ugly charts. Look at the earnings per share growth. Look at the dividend. Look at the PE. Something has got to give. Here's Nucor. And the one that's been called, here's Steel Dynamics, same pattern. And then the one called out by Trump to build the wall is U.S. Steel. PEs in the triple digits, multiples in the triple digits of earnings per share growth. Trades at less than a 5 multiple, under accumulation, pays a small dividend yield. Maybe it's worth nibbling on some steel. Don't break your teeth. I already showed you Cleveland Cliffs and Valet. And then I have no idea what this company does. So it's a utility, must be a South American utility. Is it Brazilian? I think it's Chilean, okay. And why did this make my list? Because it's a nice move, broke above its 200. Multiple kahunas of late with kahuna on Friday and a squeeze, and pays a 3% dividend. And that was a exhaustive buy watch list. Now let me just talk about what this means. It means in TradeStation, I have my advanced trading systems, and that I have a large number of stocks that I monitor during the day for Q signals, some of my signals, John Person signals, and I take these not based upon their chart on the weekend, but I'm going to look for things to occur during the week that's going to want me to pay attention to them. In Thinkorswim, I set up various market watches, and like for example, my buy watch list. Here, I have things here such as I've set it to look for 30-minute opening range breakouts. Well, that won't happen until Monday. This is a institutional buying indicator. A 1 means they're buying. I have Bible gap ups, pocket pivots. I have kahunas. I have my version of high close and low close dojis, which is John Person's incredibly wonderful indicator. I have the position of the chandelier stop. I know when the earnings are. Bob's bull and bear. If it's bullish, it means price is above the 50-day moving average and the 50 is above the 200. If it's bearish, then price is below the 50 and 50 is below the 200. This thing doesn't work. I need to pull that out. Let me pull that thing out. Customize. I look at levels for potential breakouts, and then a few option related things. So I have a number of things during the day that I'll be looking at to give me a clue. One thing I like to do is I like to actually scan during the day. For example, I might scan for, and I remember where I put it. Hold on a second. Perhaps I'm going to look at for stocks where the chandelier has turned to a buy and they had a PPS buy signal today. So I have set this up for, I think, a 5-day window on the chandelier. So this would tell me that all these stocks down here, the chandelier flipped to a buy, chandelier stop. So let's start with, let's look at the ones that have a 1, which is a positive. Kahuna. All right, so without knowing anything about it, but FMS looks interesting. Anything else? MCO looks interesting. MCO has got my institutional buy. It's got my Kahuna. It's got a high close doji, and it's chandelier flip to positive. So let's take a look at MCO. It's Moody's Corporation, I think. Let's just look over here at the chart. Let me get a chart here that makes sense. And what it should show me is that, and it's had a recent flip of the chandelier and a new PPS buy signal. So now I can start to do my analysis. But the key thing I want to show is using Market Watch and Radar Screen, I'm able to put the stocks that I'm interested into a list and then monitor them closely to find signals that I want to get in. So on that note, I'm going to say goodbye. We'll talk more about the Netflix trade next week. If you like this, please hit like and subscribe on YouTube, and we'll see you next time. Bye, everybody. Good night.